Hi, I am Sarvesh. In this video, you would see on derivatives, commodity, and currency trading. If we see derivative, it's a vast topic, but I would just cover some introduction to those topics in this video. And if we see derivatives are generally the derived prices of the underlying assets. It's not actually some share price or anything, but it's something we could say it's the price are derived from those shares. We could say something like that. And actually, if you see derivatives, it's actually contracts. If you buy or sell some derivatives, you won't get any shares in your demat or something like that. Just some contract you are buying and selling. And you can trade even index like Nifty or Bank Nifty using these derivatives. And you might ask why derivatives we should use. Because the main reasons are you can get leverage. Suppose you want to buy something worth 5 lakh of shares. Using derivatives, you could just buy it with around 1 or 2 lakhs. And in derivative, if you want to do an equity, you can buy in, hold, and sell it later. But in derivatives, you can that in equity that is meaning somewhat like you could make money in upside, not on intraday basis, but on long-term basis. But using derivatives, you could even make money on downside. And another one important factor is hedge positions. Suppose you are having a very long-term perspective, you are having some shares in your account for maybe you're holding it for around 5 to 6 years. And suddenly there's some news like Corona, COVID news are coming, and you're assuming that the markets are gonna fall. And since you have assumed that it's gonna fall, and you're having like several shares, and you might lose several value in this period of time. But you are not willing to sell those shares, and even you are not willing to lose the money. At this time, you could use derivatives to hedge those position. You could take opposite position, like something like short position in derivatives, and hedge those which are in long. So it would balance, and you will not lose any money during these situations. That's another example. Now, if we see derivatives market, it actually consists of two segments: futures and options. And if we see futures, we could say something you're buying or selling something with respect to a future value, assumed future value. It's not exact. If suppose you are taking Nifty, if it's at 15,000, Nifty future might be around 15,100 or something like that. That's depend on time also. Like, and you can do both buying and selling this. Now, if we see options, in options is something where you could buy and sell both on upside and downside. Which in options there's two segments called call and put. If you buy call options, you're assuming the prices might go up. And if you sell call options, you can assume that prices are not going to go up. Similarly, if you buy put option, you could say you're buying something, buying a contract saying that prices would go down. If you're selling put option, it means you're selling a contract, you're assuming that the prices won't go down. It's quite complicated to understand, and it does not depend directly on prices. Also, it depends on time of the contract and even volatility of the market, and there's several other factors. And I would suggest a material to read at the last video of this course. You could read in detail from those. And if you see commodity, like you could trade in gold, silver, copper, or crude oil, something. Even most of the trading is done with some contracts like futures and options. You could buy some, if you're assuming some the prices would go up or go down, you could uh, use this commodities also for trading. You could get leverage and trade in these things. And if you see currencies are generally traded in pairs. Suppose if you want trade, you have to take a pair. There is, if for example, here is USD or INR. USD is which comes first is called as base currency, and which comes second is called as quotation currency. You could say like that. And base is always taken as one, and quotation is what is the value of the base 1 unit, what is the value of the quotation value? If you take 1 USD is equal to 74.58 INR in this example. And here also that's like contracts, you could get heavy leverage in currency trading, and it's generally called as forex market, which means foreign exchange. And that's it for this video. See you all in the next video.